Good evening, everyone. My name is Jerry D'Ambrosio, Senior Instructor here at VectorVest, and it's my pleasure to present tonight's special presentation. Last week, Steve Chappell demonstrated how VectorVest can help so many people make money in the stock market. He touched on the UniSearch tool and how we break down the search directory into the different investment temperaments. Tonight, I'll expand on that concept and help you ensure your stocks are consistent with your investment style. Every investor or trader needs a plan that includes a defined balance between risk and reward. The VectorVest system of stock analysis identifies 4 basic investment styles: prudent, aggressive, conservative, and speculative. This investment matrix will help you ensure your stocks are consistent with your investment style and strategy. We'll start with the aggressive investor or trader. Aggressive investors want high performance, generally looking for capital appreciation greater than about 20% a year, and they are willing to take on substantial risk to get them there. They're looking for big gainers in stocks with tremendous upside potential. They typically like high growth stocks that are rising in price. Now, these stocks are categorized by high relative value, low relative safety, and also high relative timing. They want the stocks to be rising in price. Aggressive investors or traders are often associated with momentum style trading or swing trading. Due to the high volatility of these high RV, low RS stocks, aggressive traders may substantially outperform or underperform the market over the long term. So they're going to look for stocks with high RVs, greater than 1, and low RS ratings, less than 1. Conservative investors buy stocks, but they don't want to take on too much risk. They're primarily interested in capital preservation, not so much capital appreciation. Everybody wants to make money, right? But preserving capital to the conservative investor is paramount. And they're satisfied for average market returns. They typically buy low growth, steady performers, which pay a solid dividend. These stocks are categorized by low relative value and high relative safety. Conservative investors are virtually certain to make money over the long term, but they rarely outperform the market. So a conservative investor will favor stocks with a relative value less than 1 and a relative safety greater than 1. Again, capital preservation, safety over capital appreciation. Next, we have the prudent investor. And the prudent investor, they want the best of both worlds. They want high reward, but aren't willing to take on too much risk. They are interested in outperforming the market over the long term and achieving annual returns greater than the sum of interest rates and inflation. And the best way to meet these stringent requirements is to buy undervalued stocks with consistent, predictable earnings. They're going to favor stocks with high relative value and high relative safety. They want that upside potential, but they're not willing to take on too much risk. With these types of stocks, prudent investors are virtually certain to make money and generally will outperform the market over the long term. And finally, we have the speculative investor. Speculative investors are looking for big gains without any regard to risk. Fundamentals of value and safety mean nothing to the speculative investor. They buy stocks on news. They're excited about price volatility. Stocks with low relative value and low relative safety are unpredictable and extremely volatile. Many of them are lower price stocks, right below $10 or $5. You really have to be extremely nimble to make profits with these types of stocks. You got to pay very close attention to relative timing and always use stop prices. Most speculative investors, though, will lose money over the long term. So a speculative investor will favor stocks with low RV and low RS, right? Relative value and relative safety are fundamental indicators. So a speculative investor throws fundamentals out the window. They're not focusing on the fundamentals. They really want to favor stocks with high RTs, relative timings greater than 1, and generally the higher the better, 1.7, 1.8 and higher. Let me move into the VectorVest program and specifically the UniSearch tool. So again, last week Steve gave you guys a nice tour of the UniSearch tool, and I'm going to move over to our search directory over on the left hand side. And if you're new to VectorVest, this is the best place to start. We break down the directory very specifically, right? I've talked about the aggressive trader and the types of stocks that they look for. If I click on search as aggressive, you could see a little comments box at the bottom. It says aggressive searches find stocks with above average upside potential, RVs greater than 1, but below average safety, RSs less than 1. The stocks found by these searches can move up or down in price quickly. If you're a conservative investor, you have a description at the bottom. Conservative searches find stocks with below average upside potential, RVs less than 1, but above average safety, RS greater than 1. The stocks found by these searches are good long-term investments due to their high safety rating. The price of these stocks may not appreciate quickly, but may offer above average dividend payments as an added source of income. So just as a demonstration, guys, I'm going to give you an idea of the types of returns that you're likely to see with these different types of investment styles. So I'm just going to go to July 6th. I'm going to change the date up here in UniSearch to July 6th of 2017. And all I'm going to do is I'm going to quick test each search over a 2-week period of time. And I'll start with the conservative folder. And I'm going to select prima donnas. If I run prima donnas as of July 6th of 2017, notice the top 2 search parameters. Right away, you know that all the stocks in this list have an RV less than 1 and an RS, in this case, greater than 1.25, and that's very good on a scale of 0 to 2. So again, if you're a conservative investor or managing a conservative portfolio, these are the types of stocks you want to favor. Let me just right-click on this and auto-fit all columns. Notice, the RVs here are less than 1. All the relative safety ratings are greater than 1, and we know they have to be greater than 1.25 in this case. If I scroll over to the right, all of these stocks pay a dividend, have excellent dividend safety, for the most part very good dividend growth, and for the most part a YSG rating of above 1. YSG combines the yield, safety, and the growth of the dividend into a master indicator scaled on a 0 to 2 basis. Above 1 is good, below 1 is bad. So these are the types of stocks that a conservative investor would favor. If I went up to the top and just quick test all of them, and I'm going to take the date back to July 25th, just a few weeks out. Again, I'm just going to give you an idea of the types of returns that you should expect with these types of stocks. So notice, for that 3-week period, this basket went up about 1%, about 21% annualized. Now the VectorVest composite only went up 3%. So with a conservative portfolio, you're not generally going to outperform the market. Remember, this doesn't include dividends, so you can maybe tack on another % here with this example. 6 winners in this basket, only 1 loser. If I close this, if I move over to the aggressive folder and select bottle rockets, so in this case, we're looking for relative value ratings greater than 1.1. Remember, we want them to be greater than 1. And the relative timing, aggressive traders want stocks that are going up in price. These stocks will have a relative timing score greater than 1.5, which is excellent on a 0 to 2 scale. If I run the search, notice the sort, relative timing descending. These are the stocks that are rising in price the fastest. All of these stocks have high RV ratings. For the most part, these stocks have low RS ratings as well. There's a few stocks that have an RS rating just slightly above 1. But high RV, good upside potential, but these stocks can move up and down in price very quickly. And you can see they're all skyrocketing in price. Look at the RT ratings here. If I quick test that basket, better returns, right? Now we're looking at a 7% gain over that time period. Outperforming the market, the VVC went up about 3%. That's 130% annualized rate of return. 7 winners, 3 losers. VOXX was the biggest loser, down about 19%. So with proper money management, you're likely to cut that loser a little sooner. Now for the prudent investor. I'm going to scroll down here. All of these searches are prudent type searches that look for stocks with high RV ratings and also high RS ratings. A great search is a search called Sure Bets. Look at the relative safety. Has to be above 1.35. We're looking for the growth rate also to be greater than or equal to 10%. And these stocks are going to be sorted by our master indicator VST. If I run that search, notice what types of stocks this search finds. High RV, high RS. All of these stocks are undervalued. Prices are all less than their value. And that's actually built in the search itself. The search is looking for a stock price less than the value. All of these stocks are rising in price as well. And if I go ahead and quick test those, not bad, right? 9 winners, 1 loser, close to about a 6% gain. Not as big a gain as the aggressive portfolio that I just showed you, but still a very solid gain, about 6% over that time period. 9 winners, 1 small little loser. Again, outperforming the market. So this type of portfolio favors upside potential, but isn't willing to take on much risk. And you can see, biggest loser down less than 1%. And then finally, the speculative investor. I'm going to open up the searches short folder, and I'm just going to go to the searches speculative. It only has 2 parameters here, folks. Remember, this search or these types of stocks that we'll see here in a moment don't have favorable fundamentals whatsoever. Now I'm going to add a parameter here. I'm going to hover my mouse over stocks, capital appreciation. I'm going to select RT. Even though the fundamentals are going to be poor, we want the stocks to be rising in price. So I want the RTs to be greater than not only 1, but 1.7. I want these stocks to be skyrocketing in price. And I'm going to change the sort. Instead of VST ascending, I'm going to change the sort to RT descending. I want the stocks at the top of the list that are rising in price the fastest. If I go ahead and quick test top 10, about a 2% gain, didn't outperform the market. Some big winners in this basket though, right? 33%, 15%. But here's the problem with speculative trading. You open yourself up, if you're not nimble enough, to some big losses. You could see TCCO down 20%, MRAM down 18%. So if you're not careful, these lower dollar, extremely volatile stocks can get away from you and really blow up your entire portfolio. So you may have some big winners from time to time, but you also may have some big losers as well if you're not careful. And lastly, folks, I'm going to come up here to the VectorVest views and open up our views manager. And in this special reports section, we have that strategic investment matrix, the same investment matrix that I went through earlier. So this is a nice resource to go through if you're not quite sure what type of an investor you are and really what types of stocks you should be favoring. Well, this concludes tonight's special presentation. Don't forget, if you ever have any questions about how to make money with VectorVest, please give our support department a call. We're here to help you. Have a great weekend, folks. See everybody next week.